And so it seemed like semiconductors were somewhat orphaned by all of the lemming VCs of the Silicon Valley.
Yeah, but what we're seeing is that they're getting back into the space. So there's a few things happening. One is that we're bringing semiconductor manufacturing back to the United States. Clearly, Intel announced building fabs in Ohio. TSMC is building fabs in Arizona. TI is building new fabs here in Utah, actually. So we are starting to see way more money and capital, and clearly CHIPS Act is helping that. There's a lot more money around the table for semiconductor. And the larger VCs, you're right, like a fund that's deploying something right like 75 million over the fund life. Semiconductor manufacturing is probably not for them, but we're seeing funds who have so much dry powder that they're wanting to put large capital deployment to use.
Sure. Hello and welcome to Fireside with the VC. My name is Andrew Romans, and today we're with Jennifer Ard, who is Managing Director at Intel Capital and also the head of investment operations at Intel Capital. Jen, thank you so much for joining us today.
Thanks for having me. It's great to be here.
Yeah. So I used to be friends with a whole bunch of Intel Capital people very, very long ago, and they often have moved on to other things. But I remember, at least in the very early days, Intel Capital would say, we're going to have a kickoff offsite for the year, maybe in January or something. And they would try and figure out, these are the 4 investment themes of the year. And, semiconductors usually should have a place in that, especially when you guys have like 80% market share or something. So anything that would spark the purchase of upgrading to a Pentium chip in your laptop or something was considered a worthy use of Intel Capital. But maybe give us an update on how Intel Capital is structured today.
Yeah, I think every CVC has gone through lots of evolutions, and we are no stranger to change. We have been around 32 years. We claim we're the OG CVC, so we've been around a while. What I would say has changed is that we continue to invest in Intel relevant areas, but we're a very independent decision maker. We do invest in all things technology. We feel like we're very lucky in that we have all of the resources of Intel behind our companies, and we can go leverage all those technologists and engineers to come help our companies and help make customer introductions. What has changed though recently is that we lead about 80% of the deals that we do. We're taking board seats. We're putting much larger capital to work. We've really honed in our strategies. We have really robust thesis around where we invest. You're absolutely right. Semiconductors has been on that list of areas we invest for 32 years. Some of the other areas or ways that we categorize how we look at deals are we're in cloud. Everything from vertical applications all the way down to infrastructure and AI and all things that are related to data center devices, which is supporting some of the client work that happens throughout the industry. It's around display and graphics, some gaming in there. Frontier, which is really our kind of deep tech practice. We have put in a lot of money into robotics recently. IoT, networking sits in there. And then obviously silicon. And within silicon, we invest in everything from tools and materials that help run a manufacturing process all the way to AI hardware. We're in SambaNova. We have looked at thermals. So how do you keep data centers cool and direct chip cooling? So that silicon space encompasses anything hardware related.
Okay. And it used to be that Intel Capital, whenever they were in meetings, and I used to go to a lot of meetings with them, would say like it was a selling point. Hey, the good news is that we can never own more than 19.9% of your business because we're investing off the balance sheet, as crazy as that sounds, that someone still thinks that was the right thing to do, and that we're not allowed to own more than 20% of your business. Now, if you're leading 80% of your investments, is that still an issue or has that been?
It's not. That 19.9% was really driven by some accounting rules that have actually changed over the last several years. So,
Okay.
we are much like a regular fund, we are really optimizing for ownership. So typically we are not owning more than 20%, but we do have several companies where we, through follow-on investments and other things, we do own more than 20%. So that was really an accounting rule driven by accounting policy that just doesn't exist anymore. We do still consolidate up onto Intel's balance sheet. So, we do still have to consider that everything we do is going to show up, but it's a below the line item. And so the
Yeah.
scrutiny is less.
Okay. Okay. So, maybe we'll dive back to sectors. So it sounded like quite all encompassing, and it wasn't like thematic. These are the top four themes of the year, or what are some primary investment themes, and are
Yeah,
these driven by strategic decisions? Of where you see the greater conglomerate's business going.
Yeah, so again, we invest in Intel relevant areas, but all of our investment themes are driven by our investors, right? Just as you would expect with a regular fund, we are creating our investment themes throughout the year and our thesis. So a few things that we are looking at recently, clearly AI both from a hardware standpoint, but also, the whole ecosystem around AI and how do you actually go support that full ecosystem all the way from hardware all the up to software. We have a group of investors who's really focused on AI. We've made a number of investments in that space. Second, we're doubling down on semiconductor and silicon. Rewind 10 years ago, you could not find another investor who was willing to put money into semiconductor hardware
Right.
companies. It was just not happening. Like you'd go and
Yeah.
be like, hey, I have this really cool tool company, and people would tell you like you were absolutely crazy and it was going to take hundreds of millions of dollars. Now I get calls from some of the top venture funds who are like, we have a semiconductor thesis now. Like, what should we be putting money in? So that is another area that, while we have always been investing, we are continuing to double down on that. That's really like around
And by the
all
way,
the.
let's
Yeah.
maybe take a minute to think about that. So I remember when the cost of taking a semiconductor startup in Silicon Valley, when there was still some silicon in Silicon Valley, it would take maybe 50 to 75 million dollars to find out if this Bunsen burner science experiment works or not. And
Yeah.
so you may, if you were going it alone, as a venture firm, you've deployed $50 million into this company. And then if the thesis appears to be working, you need to send like a team to Taipei, staying at the Shangri-La Hotel 24/7 in a fab, standing next to your box, because only your startup knows how to manage the box, before you get your first purchase order. And then the second you get that first purchase order, somebody who's selling into all the fabs of the world can buy your company for $500 million, and there's all your money back. The thing is, it got to the point with the internet really coming out that for $75 million, you can have an entire fund investing in 25, 35 companies that are capital efficient, that probably even seem to have positive unit economics and are on a path to
Mhm.
profitability and high growth, transformational, blah, blah, blah. And so it seemed like semiconductors were somewhat orphaned by all of the lemming VCs of the Silicon Valley.
Yep. But what we're seeing is that they're getting back into the space. So there's a few things happening. One is that we're bringing semiconductor manufacturing back to the United States. Clearly, Intel now is building fabs in Ohio. TSMC is building fabs in Arizona. TI is building new fabs here in Utah, actually. So we are starting to see way more money and capital, and clearly CHIPS Act is helping that. There's a lot more money around the table for semiconductor. And the larger VCs, you're right. Like if you have a fund that's deploying something right, like 75 million over the fund life, semiconductor manufacturing is probably not for them. But we're seeing funds who have so much dry powder that they're wanting to put large capital deployment to use.
Sure.
And there's the supply chain has to be built around that, right? That like gone are the days where we outsource everything or bring things in from Asia Pacific. Just the way the semiconductor manufacturing process works now is you want to get the materials really close to your site. You want to get really good talent. You want to get support from your tool vendors really close. So there's more and more becoming like an onshoring kind of like area where a lot of VCs are really leaning into, like, how do you actually make semiconductor manufacturing work in the United States? And now we're not just going it alone on deals. There's very few deals where we are the sole investor. We used to take a lot of sole bets. Now almost every equipment vendor has a VC arm. Like the materials
Right.
vendors all have venture arms. Like I said, we're seeing traditional funds starting to have, like, even silicon and semiconductor funds, a lot of which goes into AI, given, some AI hardware and stuff, but a lot of it around it is like thermals and storage and memory. Like, how do you actually build the whole infrastructure around it? And we're just seeing more and more money come into this space.
I mean, I would think the Nvidia effect would, cause greed glands of some VCs to say, this is outrageous that this one company has got this much market share of what's being spent right now, and there should be barbarians attacking the fortress walls of that, you know, kind of overnight empire. And it's a joke. I mean, they've been around for forever doing gaming stuff, but those GPUs fit really nicely into OpenAI and all those generative competitors. So I would think that's maybe one of the reasons why you've got a if Taiwan were to fall into the hands of the Chinese, what is our strategy? So there's a bit of like strategic, let's onshore as much of this industry as we can. And then there's the holy crap, their market cap is bigger than Apple's. It's like crazy.
Yeah.
So that's someone else's opportunity. Is your margins my opportunity?
Yeah, I mean, and not just that, like, yes, the AI hardware piece of it's super interesting, and obviously Nvidia does own a large portion of that. We're starting to see startups wanting to take them on, right? Can you build a smarter AI chip, one that competes where people can have access? I mean, clearly there's a shortage of chips going to, but then you're also seeing the software side of that, right? Like, how do you go innovate on top of that, either through large language models or application software taking advantage of that? Or then now you've got to run data centers that are powering it. How do you actually do that power efficiently? Like, we're starting to see, AI data centers pop up, and, regulation is just as well as, for the good of the planet. Like, we can't be using that much energy to power these things. And just the noise is so loud. Like, you've got to be able to manufacture and build data centers more efficiently. So there's just like a whole host of things and areas where venture can really step in and help in several of those spaces. And I think others are seeing that happen.
What is the market capitalization of Intel roughly these days?
Oh, it's been a bit since I looked it up. I don't know it right offhand.
Okay, because I mean, it's sort of fascinating to think of Intel such a big player in some of these shifts that have happened. I think someone told me that he's got a Hungarian name that I struggle to pronounce, but
Yeah, Les
he,
Fidesz.
yeah, yeah, Les Fidesz. He was like a junior co-founder of Intel itself, and when Intel Capital was his brainchild, they were like, "Well, we're not going to cancel this CVC after 4 years, like every other CVC, because this guy's got the entire C-suite behind him to continue to just go go go." And so Intel Capital is the longest surviving continuous CVC, I think, in the world.
Yes. Yeah, we have done some market research, and we believe that we can make that claim with a lot of confidence.
Yeah, I don't think it's even remotely disputable. I also remember when you guys announced that you were going to divest from a whole bunch of portfolio assets that were deemed to no longer be um, strategic to any business unit within the company. And it made sense to me that you could unlock a billion plus or $3 billion and then use that to make a huge dent of investing in new companies that were perhaps more relevant. But I think then the headline risk was saying Intel is abandoning venture capital, and it was like misunderstood. And then it was stopped from actually going through. Is that true?
Yeah, I mean, everyone evolves, and we have had 30 years of history. I think you go look at any fund that has 30 years of history, there are things in that fund that are older vintages, and those older vintages often no longer align with your current investment strategy. It's not just true for Intel, it's true for every venture fund, right? You're going to
Yeah.
have things that are in your older funds that, you and Financial VCs do this. They will sell portions of their portfolio. We looked at it. We looked at that opportunity and went through the portfolio. And I quite honestly just decided it was, first of all, still had good companies in there, even if they were, things that we were no longer investing in, and just felt
Sure.
like we might as well continue to continue to support those companies and support those founders. And at the end of the day, it didn't make sense for us to do. And I would say over the years, given that we're putting larger dollars to work, we have smaller number of portfolio companies. We're not going to look at doing anything similar to that.
Yeah. Uh, I mean, I think that there were sound decisions being made there, and I think that the media misunderstood it, and then somehow Intel failed to articulate, stop being silly. You're being silly. This is totally makes sense. We would be spending more than Samsung Ventures if we just get this done. What is the general allocation of capital globally
Yes.
for Intel? Like, how much money do you theoretically deploy per year, and how do you even think of that?
Yeah, so we deploy generally between 350 and 500 million annually. So, we are on the very larger size of the CVCs. It is deployed globally. We have a team in Asia Pacific, we have a team in Israel, we have a team in Western Europe, as well as the United States. So we are deploying capital globally, depending
What
on the year.
percentage of this is U.S. compared to rest of the world combined?
Yeah, we're more than 50% is going in the US, and it varies year to year based on, opportunity sets of companies. So we don't look at things with the target and say, "Hey, this year we're going to deploy X amount of dollars or X% of our fund." The same thing is true with new and follow-on. So clearly we have a large portfolio. We support companies with dry powder. Again, unlike a lot of CVCs, we really do put wood behind our companies. We've had companies where we really want to go double down on them, and we've put in sizable checks. We led a follow-on deal in any scale with like several actually we increased our cost basis pretty significantly there. Same thing with Minio. So any given year it's 350 to 500. It generally though a far greater than 50% of that is coming from the United States.
Okay. And most CVCs need to come up with some balance of, are we investing for financial returns or for strategic returns?
Yeah.
And usually the CEO would say, I don't even want to bother investing if it's not strategic. And then the CFO is like, well, I want to make sure this is financial as well. I think Les has a famous quote as the founder of Intel Capital that there's nothing strategic about investing in a company that ran out of money and went bankrupt.
We
So
still
it
use that quote today.
do you
Yes,
really?
we
Yeah,
do.
so it's a good mantra. I mean, if everyone's saying only invest if the head of a BU is signed off that I'm going to do business with this startup or something, there's nothing strategic about your money's gone and the company is gone, right? But how do you
That's
think about that
yeah.
balance of strategic versus financial returns?
Yeah, that's exactly right. So clearly we're part of Intel, and there are our deals, and equity is part of our toolkit, and we can go do that to help support our business unit. By and large, though, the decisions that we make are made from an Intel Capital investment committee that is solely employees of Intel Capital. You hit the nail on the head, right? You ask our CFO why he likes Intel Capital. He will tell you it's because he gets cash out of us, right? Like we provide a return on investment. You ask the CEO why he likes Intel Capital, he's going to give you some of that same answer, but it will also be because we provide market learnings, right? So there are just topic upon topic where we can come in and say, hey, here's what's happening in the venture industry around this specific topic, whether it be environmental sustainability, whether it's AI, whether it's others. We can bring learnings in. Our CEO loves, as well as the head of our business units, to actually sit down with our companies for 30 minutes and say, hey, tell us about what you're experiencing, and why do customers buy, and how are they making purchasing decisions. And it really does help inform what we're doing in Intel. So it's not that we're filling roadmaps or anything with Intel Capital, but it's that outward view of what's happening in the market that we can bring back into Intel, which is really where I think the strategy and the strategic returns come from. And then you're right, though, like if we're not investing in things that are financially viable, that would tell us the market is not speaking that that is a trend we should be investing in. So we're looking for things that are strategically and financially viable and successful, and bringing those learnings back into Intel to help inform what we're doing.
And I mean, if you really want to maximize strategic returns, it might be good for your corp dev M&A team to know a little bit about what the CVC is doing. On the other hand, if the goal is to acquire the startup, at the Intel level at the lowest dollar amount possible, and the CVC is motivated and the founding team to sell the company at the highest dollar amount possible, how do you reconcile some of these inherent conflicts of interest? And
Well,
maybe start off by saying, what is the policy of how information is shared between CVC investing and corp dev M&A?
yeah, I mean, I think the good thing about being around 33 years is that we've really had a lot of time to hone in on this. So our teams, our corp dev M&A team and our Intel Capital team are completely separate. So if in the event that we decide we want to look at acquiring one of our Intel Capital portfolio companies, the same team does not work on those, right? There's the board member on our portfolio company, or the board observer, or the investor. They are not part in any way, shape, or form of that acquisition decision. That happens completely separately. We don't share any financial information. We don't share any company IP data. And none of that gets shared through Intel Capital. That corp dev team has to go build that information like they would any other acquirer starting from scratch would. So we make sure that we have a very strict firewall between the two. Now, where we do coordinate is on investment areas, right? Like within the silicon domain where I invest, we do have a discussion with our silicon biz dev or M&A team and say, hey, like, here are things we're seeing. And we jointly go have conversations with our business unit and say, hey, like, this is a really interesting space. Here are two tools in your toolkit. There's equity. We can go make an equity investment, or we have M&A or corp dev. So we have those conversations, and we're evaluating opportunities to understand what the right thing is for Intel. What I will say is that very few of our Intel Capital portfolio companies are ultimately acquired by Intel. We're just not a highly acquisitive company just to begin with. We don't acquire. We're not, like some of the others that are just doing almost all their strategy via acquisition. We do make a few, but it's a really small percentage of our Intel Capital portfolio.
Okay. I've seen changes over the years where there was a bit of a mutiny of, if you don't give us synthetic carry, we're going to leave. And then there was synthetic carry. Then there was some big exit. And then the CFO is writing these huge checks to people that have only been with the company for 24 years, and they're making more than him or her. And so they removed the synthetic carry. What's been the policy, or even shifting around how do you provide compensation to people so that the good ones stay and the good ones don't just leave
Yeah, I think
within the Intel Capital investing team is what I mean.
right, right. I mean, in order to have a successful CVC team, you have to have a competitive package so that, you are motivated by fund performance and you're rewarded based on fund performance, just like you would be with an outside venture fund, because that is where we're hiring from. When investors leave, that is generally where they go, from Intel Capital specifically. So we do have compensation that rewards us for fund performance. We still do to this day. I
Okay.
think if you're looking at a CVC, to be able to retain the right kind of investment professionals who are able to evaluate companies based on financial returns, I think you need to have at least some element of that within your compensation package.
Yeah, I would think so. And what about the interaction with the other teams, like in Asia Pac, in Europe, and Israel? Do you find yourself going through a very long Monday meeting with everybody, or what is the
Yeah,
interaction like
we
there?
yeah, we've struggled with that because there is no time zone that encompasses APAC, Israel, and Western Europe that is convenient for all parties on the phone. So, generally, our partner meeting on Monday, any of the earlier time slots are when we would have somebody from Asia Pacific or even Israel. Our Israel team is great about working in the evenings. Our full team meetings happen 7 a.m. Pacific time. Our China team has, our APAC team has really graciously like call in at 10 p.m. at night. Unfortunately, we don't require them to be on camera at that point. But that's when we have a couple hours of a meeting monthly to
And do you say
talk.
do you guys have a team investing in the People's Republic of China right now?
We do, yes.
Okay. Okay. So you've probably been there for a long time. There's not been any pressure to decouple in any way.
Yeah, I probably can't speak at length about that. We're obviously monitoring the situation really, really carefully. We do have a team in Asia Pacific. They do invest greater Asia as well as the within China. And
Are they
we've had
Shanghai based or Beijing or Shenzhen? Where
they're
are they?
both Shanghai and Beijing based. We have some in
Right.
each location, but they are investing in Taiwan, Korea, Japan, other areas of field as well.
Okay. Okay. Very cool. And what is the thinking about sustainability? I mean, the percentage of electricity in a normal metro area that needed to be going into co-location data centers just from fiber, in the old days was pretty big. Like it could almost begin to be bordering 50%. If
Yeah.
if you don't have like a really good deal with Con Edison, your data center is not happening in New York. Now we're starting to see that the percentage of the true kilowatt hour demand could go up crazy amounts that we just have to get nuclear right or something. What is the discussion, or do you know any numbers you can share of like what anticipated increase of electrical demand is? And it would seem like the United States is incapable of putting in a regulatory regime that will remotely give us a competitive kilowatt hour price, even to run in a purely automated Tesla factory here compared to a fully automated Tesla factory in Chengdu, China.
Yeah, I don't have specific numbers, but what I do know is as we work with, our suppliers, our portfolio companies are building out data centers, what we're being told is they are as they get approval to build those data centers, they're being told there can be no power increase for what is happening. So you have to go build a data center, but with more powerful chips, and you want to have a more efficient ability to go run that data center, but it cannot use any more power than it previously has. In fact, it
But that
should
doesn't
keep
sound like it
decreasing.
would work.
Well, so that is where there's a lot of innovation going into that space right now. So, it used to be that every single data center was cooled via these huge air conditioning units that were put on the top of the roof, and
Raised
it was so
floors and
loud.
yeah.
Yep. So now they're re-evaluating all of that, and we're looking at direct to chip cooling. So do you have these? And we have a really cool company in our portfolio called Fabricate Labs that's actually manufacturing chip, basically cooling plates that will sit just right on top of a CPU. It has a liquid cool flow to that. You can put it right on top of a chip. It's quiet. It's very efficient. All of the hyperscalers are moving to liquid cooling at this point. They have to, right? And so, we're getting rid of a lot of the power usages within those data centers, and they're really pushing the envelope. You see these big hyperscalers and, users of end data centers, and they are like, hey, I need more kind of compute power with less energy, and they're like pushing their system integrators and their cooling companies to be able to do that. And more and more we're seeing that is absolutely happening, and there's really cool innovation. All of that's really going to happen over the next few
And
years.
Intel, I think, is you have directly involved in the data center construction industry, right? I mean, doesn't Intel make data centers?
So we have our own data centers, and then we obviously sell our chipsets and other hardware directly to data center providers, but we're not actually building data centers on behalf of customers.
Okay. Okay. And so, what other sustainability issues
Yeah.
have become important for you guys?
Yeah, another one is materials. So there's just more and more every time you move generation to generation within semiconductor, you're using rare earth materials, you're using materials that are hazardous to the environment, you're using, like, we're getting PFAS or forever chemicals coming out of those factories. So we're looking at cleaner ways to bring materials into the company. So really working, we have a company in our portfolio called Impact Nano that is really manufacturing materials more sustainably. Those materials that they are manufacturing are much cleaner for the environment. So getting the right materials on the front end, because materials, quite honestly, is how semiconductor manufacturing innovation is going to happen, right? Everybody has the same tool sets, and we don't upgrade those every generation, but the materials that are used, that's like the sweet sauce for every single semiconductor manufacturer. So just getting really efficient and putting in the right kind of materials into the process. And then on the back end, it's how do you abate them, how do you recycle them? And we're looking at a lot of companies that are bringing and taking rare earth materials out of chips when they're recycled, or out of the process, like how do you get copper out of the process and make sure we're recycling it and using it. And then just how do you clean up greenhouse gas emissions at the same time, and like making sure that there's filtering on our tools and on just the whole manufacturing process in general. One thing we've done is we've partnered with almost every single one of our kind of industry VCs, Applied Materials, Lamb Capital, Integris Ventures, Micron Ventures. All of us have put together an initiative that does like a huge pitch competition every year. We call it Startups for Sustainable Semiconductor. Last year we had, I think, 70 companies apply to the program. Just really innovative, like how do you recycle water? How do you get materials out of the water that you need in order to make sure that we're water zero or water neutral in our usage. We're not using any water that we don't put back into the ecosystem. So we are more and more, I think we have all decided that, unlike some of the other innovations, we've got to work together to make this happen. So all of
Yeah,
the,
definitely. I mean, when you're
yeah.
describing all these types of topics, even anything with even hardware in it, like IoT, is almost like instant no from most of the VCs I know in Silicon Valley or New York, and I mean especially New York. My God, they wouldn't even have the patience to look at a material anything in there. So I would imagine that it forces you to develop a whole set of new co-investing relationships. And I could
Yeah.
bet you a lot of German CVC manufacturers or become good partners for you guys when you're really executing on that side of the stack.
Yeah, it's not just Germany, but any investment arm in
Finland,
Europe
these
is
are like
smarter.
places where
Yeah.
coatings are done and
Yeah. They are way smarter than we are in the United States about, what's coming down the pipe. We have several co-investments with companies in Europe, and we love working with them.
yeah. Do you ever work with Silicon Catalyst, Rick Lazensky's group in Silicon Valley? Do you know Rick? He's an
Yeah, we
LP of
were.
ours. So
We've had relationship with Silicon Catalyst for several years, and yeah, we absolutely look at companies coming out of Silicon Catalyst, and we've had relationship with them for years.
yeah, they're great. They're always saying we're going to put the Silicon back in Silicon Valley after it's been completely taken out. Okay, and then and what about moving to Salt Lake City? When did you move to Utah? It's been just such a
Yeah.
booming VC startup ecosystem.
Yeah, it's actually been fascinating. I was in Portland for years before COVID hit, and really commuting to the Bay Area. That's where a lot of most of our fund is located. And at that point, for family personal reasons, I made the move to Salt Lake. But with that, Portland to Salt Lake has been a really interesting transition. And you're right, the Salt Lake VC ecosystem is booming. We have so many startups in this area. It's been really fun to go get to know like the other investors in the space. Lots and lots of software companies, lots of really, really innovative founders here who are going to do really interesting things. Several unicorns, companies going to public here. So it's been a great move. It's fun to see kind of a new ecosystem evolve. I think we call ourselves Silicon Slopes, and
Yeah, that's the big
a lot of the
event. They
work.
did the
Ha-
big Silicon
yeah,
Slopes event. Yeah, yeah.
happen on the ski slopes here, and everybody wants to come to Salt Lake in the middle of the winter, which is fantastic. In fact, I'm on the board of two companies here in Salt Lake that are startups within the Intel Capital portfolio. And again, it's just really fun to see the kind of young startup kind of environment that we've created here.
Yeah, yeah, it's definitely contagious and it's grown real fast. And Jen, what stage are you investing at in general? I mean, that's shifted over the years. But what
Yeah.
would you say about that? What's the right time? And if, for a lot of the topics that you guys are attacking, you're not really going to see a ton of revenue in them. So it's maybe hard to even give it a revenue definition.
Yeah, it kind of depends a little bit based on what kind of thing we're in, but we invest everything from seed to later stage. So, I would say that 80% of our deals are in Series A and Series B. That has just kind of been our sweet spot. Clearly, we've invested in several seed companies over the years. A lot of them are our repeat founders, right? Just like every fund, we want to stay close to those, as well as we stay really plugged into the university research area. It was specifically in Silicon. There's a lot of great innovation coming out of places like Berkeley or MIT or Harvard or others. So we've invested in several kind of university spinouts. And then we can go later. We've done a few later stage deals this year where we just feel like the technology is something that we're really interested in. And, from a fund, just a fund, putting together a fund structure, like if all your stuff is really, really early, it's going to take a long time to get exit. So we have consciously put a few things into where it makes sense into later stage deals. So we really are agnostic and have flexibility to be able to go anywhere, but really 80% of our deals are Series A and Series B.
Okay. Well, maybe a closing question here for you to share with us is what advice would you give to CEOs of large corporations thinking about launching a corporate venture capital CVC business unit, or if they're thinking about unplugging one or making some changes to one, what advice would you give there?
Yeah, probably my biggest advice is it is not a short-term game, right? A fund structure from an outside fund, you're looking at a 10-year fund life. And so you can't start a CVC and then think in a year you're going to have all these great, great things coming out of it. It is really, you're putting time and energy into these startup companies, and they're some of our best companies we've had in the portfolio for 7 to 10 years. And we've had to sit on the board and help, and they all pivot. And so it's not a short-term game. If you really want to see the benefits from it, you have to be committed for at least 5 to 7 years to start seeing not only financial returns, but strategic returns coming out of those. So I think it's just to be patient and understand why you want to put it into place. And if it's roadmap fillers or things like that, it may not be as beneficial as if it's market learnings and understanding what's happening in the ecosystem. But it's a long game. It's not a short game.
Okay, take a long-term perspective,
Yeah.
would be smart. Yeah, agreed. Well, Jennifer, is there anything else you want to share before we wrap up here today?
I think just, we love working with our founders and our startup teams. So if you're interested in an investment from Intel Capital, I'd encourage you to reach out, and we'd love to have discussions.
Okay, fantastic. Well, we can put your information in the show notes. Okay,
Yeah.
thank you
Sounds good.
so
Thanks,
much.
Andrew. It's been a pleasure.
Okay, bye-bye.